and record our class for posterity in case you ever want to review it, or if somebody who's not here wants to see the class. I will review it. I will record it, and I post the link to Blackboard, and then the hard copy or the actual recording is located in our YouTube playlist. And I will show you that as we get going. Tonight is mainly an administrative night. I don't know how much experience we all have here. I was hoping to get some of that in some of your bio. There's Wendy. I was hoping to get some of that in your bios. If some of you are new to this, that's okay. No big deal. I am here. I have taught online. Geez, I'm an old gangster. Let's see. How long have I taught online? I've taught online for over 9 years. So I'm kind of have an old hat at this. So if any of you have issues with Wi-Fi, any of you have issues with space, I understand that a lot of you are doing this from your home and you got kids or dogs or meals or people or everybody screaming and yelling. So don't worry about that. That's not a big deal. But if it's uncomfortable for you, just let me know and we'll work at that accordingly. But because most online classes are not like this, it's just you go online and I do a video to the class, and then you have materials to read and assignments and case studies and that sort of thing. But because of the newness of this, and we have some students from other campuses who have been literally forced to take online education, that's why we have these lectures on Monday evenings. And we do it a little bit differently, but in the long run, I think it works out better for you anyways, because then you're guaranteed to see me at least once a week. And also it's a recording of the lectures. It's the highlights of what you need to do. And also it goes over any issues. We're going to be doing in this class a lot of platforms. We're going to be doing YouTube. We're going to be doing Excel or spreadsheets. We're going to be doing PowerPoint. We're going to be doing APA format papers. We're going to be doing all kinds of stuff to make you enjoy your summer here at the University of La Verne. Because to be perfectly honest with you, you guys are at the top of the pyramid. You are advanced MBA students. The 635 or the 600 series of MBA study is the top of the MBA ladder. At this level of study, you are considered professional, experienced MBA students. So the requirements of you are going to be a little bit greater. More presentations, more spreadsheets, more analysis, and something, it might be quite a new concept for some of us, more thinking. You actually have to think in this class. It's just not cut and paste. It's just not multiple choice. You have to interpret and think, because if with an MBA degree, that's what employers, that's what the real world expects an MBA student to do. Not just put together a time value of money analysis, but to actually interpret that analysis and let us know what you think about it. That's what we're going to be studying in this class. And that's an important thing. So as we go forward every week, I have a set pattern on how I do things. And we're going to go over that pattern tonight. So every week you can expect the same. You can expect an agenda. You can expect an introduction video a couple of days before Monday. You can expect the Blackboard to be all set up for you for review. You can expect me to be available to you 24/7 if you have questions or concerns. So with those expectations, we can do a lot in 10 weeks. And that's what we're going to be working on, and that's what we're going to be talking about tonight to get you prepared for that. All right, so let's take a look at the first item on our agenda. Let's bring that up. Every week, I post an agenda, and I include that. And this week, I kind of made a goof in my introduction video. I posted the wrong agenda. But normally, I'm a little bit sharper. I guess, give me credit, I needed a week off from the spring semester, so I guess I was a little flaky. So I post an introduction video. It's about usually a 3 to 5 minute video, just explaining to you the coming week's events, what you need to be prepared for, and how you are to get ready for our class lecture on Monday evenings. So tonight we're going to mainly get familiar with our course, understand what advanced finance is, what I expect from you, and what you kind of expect from me. Go over the infrastructure of our class, the syllabus, the schedule, our Blackboard site, YouTube, the various platforms we're going to be using. Then we're going to talk about things that you probably should already know about. This is where it gets scary. The time value of money, debt, bonds, stocks, the capital asset pricing model, risk and return, the beta analysis of a company. If any of those fell on deaf ears, where you go, what, huh, what, what's he talking about, huh? We need to get those under our belt by the end of this week, because when we go on and continue on into our class, those will be tools of your interpretation of data. They will be tools of your interpretation of events. And so that's why we got to make sure we remember and review the concept of present value and future value, the concept of what a bond is, the concept of what stock is, the concept of risk and return. Why is the United States stock market kicking butt these days when 15% of the workforce are unemployed? Why is the stock market?
You like the pooper, Andrew? What's that? Why
Turn off your mic, please.
What's that? That's food?
Thank you. Now I lost my train of thought. Oh, well.
I don't know what's that.
So Wendy, you're on the phone, huh? Shake your head. Can't hear you, dear, but that's all right.
There we go. I'm on
There.
now.
Okay, man. Good, Wendy. All right.
Yeah, I can hear you now. Thank you.
Okay. Tiffany, you're okay with your mic? I'm gonna mute it, okay?
Yeah, go ahead. Sorry about that.
There you go. Okay. I have only one pet peeve in this. Well, I have two pet peeves in this class. I might as well get those out in front. If you don't have anything to say, I don't want to hear what's going on in your environment. Okay? No offense. I just don't want to hear about it. Turn off the mic. Turn on the mic as long as you want to talk. But I don't want to hear about whatever. Okay. Second pet peeve, if you can't come to class on Monday evenings, just send me an email. Mr. Hassey, I'm not going to be there tonight. So I know that. I prepare for class that I expect everybody to be here. Not that it's going to always happen because it's summer. It's not really mandatory to attend class. It's an online class. But trust me, if you don't attend my lectures on Monday, you're not going to get an A. I'll tell you that right now. If you attend the lectures on Monday, you'll be prepared. If you don't attend the lectures on Monday and just try to go through by looking at the YouTube recording of the lecture, if you're a good student and sharp, you might get an A. But remember, if Wendy and Marianne and Stephen and some of the other students who have had me before in this program, by the way, congratulations to Wendy Lester. She now has had me 4 times as a professor. Whew. That's what rehab can do for anybody. But be that as it may, if you attend class, you will be better prepared for the case studies, because the case studies are thinking and strategy, and I throw you curveballs, and you got to be prepared. So that's why it's important. So if you can't attend class, that's fine. Not a big deal. just let me know so I can prepare for that and provide the proper information to you if you're going to miss class. That's important. Okay, so that's our agenda for tonight. You have a discussion post due next Sunday. Tell us a little bit about yourself. Many of you have already done that. And also, more important than the bio is you're going to schedule a meeting with me over the next week, Tuesday, Wednesday, or Saturday. And at that meeting, you and I are going to talk directly on Zoom, just you and I'm going to go over the course, introduce the material, get a little personal, making sure you feel comfortable with the platform, making sure you feel comfortable with this environment of online education. I know especially for our high desert and Ontario students, you don't have much experience with online work. I want you to feel comfortable. All right. Even though I look like I should be on the SpaceX Mission Control Center with this headset on, I am fully prepared to help you any way I can to make this course seamless, comfortable. Now, I'm not preparing you to guarantee you're going to get an A, but I'm going to make sure that you're comfortable in this environment. And that's why we're going to have a little face-to-face meeting for 10 or 15 minutes this coming week. If you do not make a meeting or make that meeting, you will be marked as class participation. You'll see your grade posted to Blackboard as not an A for this week's work. So this is a graded assignment. Fill out a bio and make an appointment with yours truly to talk about the course. Trust me, the more you're comfortable, the better you will do the material. So that's, and I'll show you that setup in Blackboard for our interviews in just a moment. So that's our work for this week. As I said, every week, usually on Friday prior to the Monday class, I will send you an introduction video and an agenda for that Monday night of what to expect in the next week. And then you can prepare yourself. I urge all of you to check in with Blackboard daily. Daily. This is an online course. This isn't, oh, I can go to Vegas this weekend and I'll hit Mr. Hassey's class at the end of next week. You do that, you're not going to get an A either. You can go to Vegas, but take the laptop with you. All right. So make sure you check in. All right. I don't know what your course load is for this summer. Usually the summer course load is a little bit lighter, but you need to check in, especially in this course, on a daily basis, looking for posts, looking for adjustments, looking for information, anything. And I'll talk about where that data is in just a minute. Okay, so that's our agenda. Here's our syllabus that I hope many of you had a chance to review. As some of you have been in the University of Laverne program for a while, one of the things that's happening is we're getting a little bit more sophisticated and detail-oriented in our information given to students. All right? We're forced to do that by the pandemic. We're forced to do that to provide quality information and services so the student can succeed. If you notice, this is a long syllabus. There's a lot of stuff here. A lot of stuff going on. It's there to provide you with the necessary tools so you can succeed. All right? And so all this information is for you. So I hopefully in the next week you have a chance to get through it, understand it. If you have questions, let me know. In addition to our Monday classes at 6 o'clock, we have office hours, 3 to 5 p.m. every Wednesday. Now, what does that mean? It means you know you can come online by clicking the Zoom link for the office hours every Wednesday at 3 o'clock. And when you come on, you'll see me like this, staring into the screen, waiting for anybody to come online. I'm teaching 4 classes this summer, Monday, Tuesday, Wednesday, Thursday. Every class has office hours. If you have questions, problems, complaints, you want to place a bet at Santa Anita, whatever, you can come to these office hours every Wednesday from 3 to 5 and we can have some time together. Now that does not mean, as I said earlier, you don't have access to me at all times. You do, but you're guaranteed every Wednesday at 3 o'clock, I'll be there. Now this week's a little bit different because every day, Tuesday, Wednesday, and Saturday, I'm going to be online with all the various interviews we're going to have with the individual students in our class. So it's a little bit different this first week, but I have office hours every Wednesday. My email address, my cell phone, my Zoom office. Here's our YouTube channel, which you're going to get to know. If you click on this link, up comes my YouTube site. Hello, YouTube channel users. My name is Rick Hassey, Boy, did I look and I'm fat introducing there. you Let's to stop my that. playlist. All right. Wendy, do you see the YouTube channel on your screen? Okay. See, that's why I'm asking you. Let me make sure that I get this up. There it is. Okay. Now you should see it.
Yeah.
That's our YouTube channel. This is a channel that I have for every course that I teach. If you click on playlists, you'll see our class right here, 635 Managing Financial Resources, Summer 2020. You click on that, and up comes all the videos of our class. There's my introduction video from the other day, right there. And videos that are going to help us learning advanced finance. Some of these are already embedded in Blackboard, others that you can look at them on your leisure. If I'm talking about present value tonight and you go, oh my God, it's been 8 years since I studied this, you can go to the time value of money video and watch it. You can also go to chapter 4 in the textbook if you have a textbook. But the video, remember I said at the beginning of our class, or I haven't said it tonight, but before, the textbook for this class is not mandatory. You don't need it. You can have it if you want to. There's a new 16th edition and there's a 15th edition out there. 16th edition just came out. You are not required for it. There's PowerPoints from every chapter in Blackboard. There's videos from the publisher that I provide here. So that's where YouTube can be a very good platform. When I post my video of the recording of this class tonight, tomorrow morning, it'll be in this playlist. You can review it if you like. You can review segments of it if you like. All right, so that's why YouTube is a very important platform for all of you. It's a study tool, it's a review tool. It'll help you manage this class. All right. Now let's get our syllabus back, huh? And how come not many of you are showing me your videos? Are you that ashamed of the way you look? Stephen, you're a good looking guy. Alexandra, you're nice. Efren, you're a good looking guy. Shouldn't wear a hat at home though. You should always take your hat off in home. That's how I won't criticize though. Peter, Joseph, Wendy, I don't understand the background. She lives in the high desert. What she's doing in San Francisco, I have no idea. And there's Stephen, good old Stephen's got the beard going, pretty good. And so, again, I'm not forcing you to turn on your video, but it's just nice to see you every now and then. How would you like me teaching this class with my screen black? That wouldn't be too cool. Yeah, but Mr. Hassey, you're the professor. Yeah, but it's good for the professor. There's Elizabeth. Good seeing you, Elizabeth. Nice to see you. And so that's good. So I want to get to know you guys. You see, if I get to know you guys, you're going to learn easier. Trust me. There's Teresa. Teresa has had me before. I don't know why she came back. I must have done something right. And there's Raphael. Very good, Raphael. Good job. Good looking guy. Everybody's got the beards. Very good. And so, good. I'd like to see it. Now, again, you don't have to. Oh, here's a chat question. Oh, Efren, long day. You've had back-to-back Zooms? Good Lord. I'm sure you might have a nice cold one below you there on your desk that I don't see, and it's all right. No, nothing wrong with that. Have a nice cocktail while you're taking class. That's one of the nice things about online education. All right. Okay, so that's good. So let's get back to this again. Now, some of you are saying, Wendy's probably saying, oh, Hassie hasn't changed. He's still the knucklehead he's always been. But at the same time, some of you are going to say, what's the deal with this guy? It's my teaching style. Deal with it. Okay. Now let's get back to the syllabus here. All right. So there are all kinds of links there. I have a a Twitter playlist in Twitter. I post interviews. I post things there that might be important. Wall Street Journal, if you don't have a subscription, you should. If you want to be in business, an entrepreneur, a manager, a VP, a CEO, a CFO, you should be reading the Wall Street Journal. It's expensive, yes, but here at hass.com, you can get it free, the Wall Street Journal. Here's what we're going to be trying to do in this class. And one of the key things about this class, many of you have taken Business 500D before. Many of you have taken Business Finance 330 in undergraduate study. And probably in all those classes, you did a case study. California Best Trucks, Tesla, that's some of the other ones. I can't remember. Well, we're going to be doing the same thing here today as your final paper in this class, this semester, this term. It's called the electrics case. Again, you're going to be doing a capital budget analysis, interpreting risk, and a decision that a company has to do. Remember, finance, the definition of finance is to maximize shareholder or investor value. That's the role of finance. Maximize the value of the firm. How do you maximize the value of the firm? You invest in assets that provide profit. You invest in assets that allow you to pay back debt. You invest in assets that allow you to pay dividends. You invest in assets that the market says, hey, Amazon.com, I'm going to buy you at $2,900 a share. You invest in assets like Tesla, where you can buy stock in Tesla for $950 friggin' for that company, which to me is so overvalued, it's unbelievable, but there's a sucker born every minute in the market. You're not going to get that $950 back for years, but people are willing to do that. We'll talk about that. You invest to create value, and that's the role of the Chief Financial Officer. That's the role of finance in companies. Electrics Incorporated is the case we're going to be doing. And we're going to be solving these 6 questions in this class. Forecasting financial requirements using the percent of sales method. Analyzing the financial position of a company with financial statement analysis. Maximizing a firm's value by allocating financial resources. Evaluating alternatives in regards to cost of capital. Evaluating whether a company should do an IPO and go public. Evaluate leasing, mergers, acquisitions, other ways of getting capital to invest in assets. That's the nature of this course. The nature of this course is to understand those 6 concepts, but at the same time, interpret them and strategize in a certain situation. Every company in America this morning got up and started Monday by doing 3 things. 1, how much cash do we have in our bank account? Ooh. If we have a lot of cash, maybe we can start hiring back some people. if we don't have a lot of cash, they got to keep being laid off. Professor Hassey, I don't see your screen. Peter Murray, thank you very much. You don't see my syllabus? Let's try this. Thank you, Peter. How about now? Wendy, you see my syllabus? There you go. Okay. What I was talking about. Oh, yeah. 3 things companies are thinking about this Monday morning, August 8th, 2020. How much cash do we have? Is our market viable? Are people buying our products? Or are they still hiding out in their Zoomathons and waiting for the environment to get better? Cash, market, and 3, what's going to happen August 8th, 2021? What's going to happen in the future? And how can we prepare for it today? Poof. That's why you're going to get the big bucks if you're an MBA graduate. You're going to answer those 3 questions every morning. And you're going to determine whether you have the answers, the interpretation, and the data to make your company create value, return, cash flow, profits. There we go. There it is. Here's our text. It's optional. 15th or 16th edition of Brigham and Earhart, Financial Management. A good text, but if you don't need it, you don't really need it. Save yourself some dough. Here's our grades. We have 4 case studies, each worth 15%. What is a case study? I give you some questions or situations where you have to interpret, calculate, and strategize about that information. 1 case study will be all spreadsheet. 1 case study will be all PowerPoint. 1 case study will be all an APA formatted paper. And 1 case study, you choose. You determine what format that case study will be in for your answers. 4 case studies, spreadsheet, PowerPoint, paper, you choose. You have a case paper to do. That's the electrics case. I give you the topic in about week 4. It's due the last week of class. That case paper, the Electrics Corporation, is 2 files, an APA formatted paper and a spreadsheet analysis. And then 20% class participation. Coming to class, answering the discussion forums, making sure that by the end of 10 weeks, I know who you are. If I don't know who you are, something happened in the class participation deal. Okay, there's 22 of us, I think, in this class. Maybe it might dwindle after tonight, but hopefully not. We have 22 in this class. That's a pretty good size online class. But it's my job to make sure you all are comfortable and engaged and relaxed in this environment. The work is going to freak you out, but that's a good thing. Makes you think. But if you're relaxed, comfortable with the platform, you'll be successful. You've seen all this before, but it's always good to check up on it. Here's something that's a little bit different from prior Hassey syllabuses. There's the paid political announcement of Laverne, our vision, our mission, blah, blah, blah. And now we have some other things. Social justice, diversity, accessibility, Title IX, resources if you're having difficulties, psychological, student health, safety and security. Wait a minute, why do I need campus safety? Yeah, you do. If you're threatened at home or feel uncomfortable at home, Laverne will help you. Hopefully you're not, but That happens. These are difficult times for a lot of people. Laverne can be a source of help for you if you need it. Academic Success Center. Hopefully at this point in your academic career, you don't need to understand how to write a paper or put together a spreadsheet or put together a PowerPoint, but there is a Success Center to help you with that. So all different types of services available to students if you need it. So that's important, especially these days. And then our course schedule. Everything here in yellow is a grade. Everything that's highlighted by yellow is a grade. So as you see, there's only 1 week, week 9, no grade. Be aware of that. Make sure you're aware of that. Every week, our topic, the chapters I'll be going over. Okay, so put that in the top part of your notebook, put that in the top part of your digital flash drive. That's our plan for our term. Okay. Anybody have any questions about the syllabus? Okay. Very good. Now let's take a look at our Blackboard site. Was here a minute ago. Let me find it. It's gone. All right, I'll bring it back. Okay. Our Blackboard site. This is Finance Central for Professor Hasse in Claremont. Tough life. My laptop, a nice, cool, non-alcoholic beverage, I might add, and a nice view of the neighborhood. But the key thing for you is not where I'm sitting. It's where you and go find information. Our course syllabus is located here. 2 different versions, a PDF and a Word doc. Also, a drop-down calendar or schedule, which we just saw, where you can just do a quick reference to what's going on this week. Some pandemic views of Professor Hasse, and a little bio. E-policies. My only e-policy really is don't use bad language in our class. Don't offend anybody. Make sure you just keep a professional profile in our class, and that's all I ask. That's fair. So that's our introduction folder. Whenever I send an email to you, and I know a lot of us don't pay attention to emails much these days, that email will always be posted in the announcement section. In the announcement section. So one of the first things you should do when you log into your Blackboard is go to the announcement areas and make sure you're up to date with any information I send you. Every week I'll be sending you an introduction email, just like week 1, with the links to an introduction video and to our class. I'll make sure next time I put all the passwords here to avoid confusion. YouTube is changing a little bit these days. They're automatically requiring a password for every class. That's because we don't get any of those wackadoodle vultures hacking into our class and causing all kind of havoc. So one of the things that I have to remember is Zoom automatically assigns a password that you need to know about. So I make sure that is accounted for in the future. Here's our Zoom links. When you have your student meeting, this is the link. I will post that password to this and just after our class this evening. Here's our link to our class this evening, and every Monday, there's the password. And here's our office hours link on Wednesdays. I'll post the link to that, the password to that as well. Just click on these and you're in. Class discussion. Here's our work that is due this week. By Sunday, this needs to be all completed for 5% of your course grade. Tell me a little bit about yourself. Please include your social security number. That's important. That's a joke, by the way. Tell us a little bit about yourself. And then send me a date and time after checking the schedule and making sure that date and time is not already taken. And send it to me to pick a time when you can click on to that link at this appropriate hour and talk with me about this class. So you pick a time either on Tuesday, Wednesday, or Saturday. Saturday usually is pretty popular because many of us work during the week. And so that's a good time to come in. But I need everybody to do this week. If you do not, and you complete a bio, you'll get a 50 as a grade for this first week, 50. If you do your bio, you participate in my interview, you'll get 100. That's 5% of your course grade. So it's important. Don't blow this off. Like Marianne might say. Marianne says, I had Hassie last term. Why do I need to talk to him again? Well, Marianne signed up because she knows, hi Marianne, by the way, she knows that this class is a hell of a lot different than the accounting class she just finished. She needs to see that platform, discuss that situation, let me show her what I'm going to be trying to do in this class on an individual basis. So at the end of class tonight, it'd probably be a good idea, if you've not already done so, is to sign up for a time, and then I can fill in this calendar with the 22 names of individuals we have in this class, so you can come and see me as a visit during this next 5 days. That's our work for this week. That's our graded work for this week. And then we have the individual weekly forums or file folders. There's my video introduction. You can just click on this here and you can see that video. You don't need to go to Blackboard, YouTube. Here's the agenda again for our class for tonight. Here's an introductory PowerPoint that I'm going to be, this is my lecture for this evening. As soon as I get done with all this administrative crap, we're going to get into this PowerPoint. It defines the class. This class is qualitative, not quantitative. What's he mean by that? Quantitative class is calculations, numbers upon numbers. Accounting is quantitative. All right. Yes, you're still going to be doing calculations in this class, but this class is qualitative because you have to determine what those numbers mean. Interpretation. People are going to pay you the big bucks with an MBA degree because you can think, not because you can calculate. Because you can lead, you can manage, not because you can do a spreadsheet. A spreadsheet is a tool and an important tool, but you are going to need to think. That's important. So every class has now been set up. Week 2, week 3, week 4. I'll make additions to this as we go on, as I get to know you, as I get to know your backgrounds. It's very important to know your backgrounds, and that's why I like the bios. We have some people here who work for utility companies. We have people who work here who are veterans. We have people here who are entrepreneurs. We have people here who work in service industries and manufacturing industries. That's going to drive my discussions in class, knowing where the background you guys come from. That's important. It drives the material. It makes it more relative to you. That's why it's important that I know some of you work at utility companies. Utility companies are driven by preferred stock, are driven by interesting capital strategies because the government regulatory commissions tell you what to do as far as pricing, revenue. That's a little bit different than somebody who's an entrepreneur and getting into a new market. So it's helpful to me to know the various backgrounds that you come from. Very important. Especially also if you're a veteran. You've been trained and disciplined in military operations. That can be very, very helpful in management. Trust me, it can be helpful. We'll call upon that. Also, I would like you all to engage with your experiences and talk to me about it, how that can apply to our discussions. Many of you are managers and bosses already. Tell us about your business successes. But more important, I don't want to embarrass you, but tell us about your business failures. You learn more from failing. Trust me. Boy, can I tell you about my failures. And I will in some cases. It's important to analyze that. Why did we fail? What did we do wrong? Was I not very communicative with my staff? Did I not read the data correctly? Did I not know my industry or my market very well? Did I depend on a consultant to tell me what to do when I should have just went with my instincts? A lot of discussion can involve around that. So we'll talk about that. So that's our Blackboard site. It's a way that I can teach you outside of being in Zoom. If you take advantage of it, it'll be very helpful to you in the case studies that we will be doing. It'll provide you information, documentation, examples, and that's an important thing to do. Okay. So this is what we're going to do now, and I do it usually every Monday at the 7 o'clock hour, is give you a little break. 10 minutes, take a break. Smoke them if you got them, maybe a little beverage, or just get up from your desk and stretch, because that's what I'm going to do, and give yourself a little break. So we're going to stop this for about 10 minutes, and then I'll come back on at about 10 minutes after 7, and we'll do my lecture for this evening, and we'll go from there. We'll be done by 8 o'clock tonight. Not that big of a deal tonight. So Wendy, as the sun is setting on San Francisco Bay, you can have a reasonable, still a younger evening ahead of you, even though we'll be done about 8 o'clock. Joey, what's the deal with your camera? You look like you're in a fog. Oh, you turned it off. Sorry, Joe. All right, so let's take a break, and I'll see you back in about 10 minutes. Thanks. Okay, we are back. So, Business 635, managing financial resources. What does that mean? It means managing the assets of the company. Now, what's an asset? An asset is something you invest in. What's an investment? Well, legally, it's three things. An investment is borrowing of money, debt, either short-term accounts payable with no interest, or long-term with interest, mortgages, bonds, lines of credit, that sort of thing. Debt is one. Two, equity. The issuance of ownership in the company, capital, be it common stock, private stock, be it Shark Tank, private equity. The raising of capital by the issuance of ownership. And third, profits. Debt, equity, and profits. They provide the investment to purchase assets to properly make money or make capital, make return. Our job as MBA advanced finance students is to put ourselves in situations where we have to interpret and strategize, where is this capital coming from? How is it a deterrent to our business, or how is it helpful to our business? How much does it cost to get this capital? Accounts payable, the cost of that capital is 30 days. 30 days of free money, but you got to pay it in 30 days. That's the cost. The cost for long-term debt is interest. Interest. The cost of common stock, equity, is the required return the investor expects to get. Why is the stock market continuing to go up these last couple of weeks? Because investors still think there's value in the market. Companies are going to get out of this mess. And investors still are thinking that. There's a return. Their expectations are positive. What's the cost of giving your money to Mark Cuban on Shark Tank? He now owns a piece of your business. And he runs the show, not you. You got to keep him happy or your life will be miserable. Private equity, hedge funds, Shark Tank. There's the cost. And what is the cost of profit? Not too much of a cost. If you're making profit, that's the cost is making the profit. The cost is running the business in an efficient, manageable way to make a profit. Those three ways provide capital for assets. What is assets? Equipment, buildings, land, copyrights, patents, and people are assets. Excuse me. Why do you think Jamie Dimon has a salary of $55 million a year running JP Morgan Chase? Yeah, really. 55 million. Really? Yeah. Why? Because in the market, the cost or the value of his services is $55 million. Why does LeBron James get $40 million a year from the Lakers? Because they know his cost in the market is that. Salary. Expectations. It's an investment. You're trying to tell me an investment in LeBron James is not a smart investment? Are you kidding me? Trying to tell me an investment in Jamie Dimon with his track record of running banks is not worth it? But Professor Hasse makes $12.50 an hour teaching finance. What's up with that? Is that his value? It is in the market of University of Laverne, and I don't make $12.50, so sorry, I don't get anybody all excited about that. All right, $14, let's call it that. But that's the value of that asset, my asset as an employee in the market. Now, if I had a Nobel Prize in economics, if I taught 20 years at Harvard, my value would be a lot greater. But I'm just a schmo like everybody else. The value of assets in the market is what drives the investment dollars to create those assets. You as advisors, as consultants, as managers, have to determine the importance of this in the market. Corporate finance is important to management because the knowledge of capital budgeting, capital structure, and working capital provides for effective decision making if the corporation is to maximize profits and stay competitive for future success. Today, it was declared that we are in a recession. Geez, really? It doesn't take a brilliant person to figure that one out. But here's the kicker. The recession started the first week of March. It kind of makes somewhat sense. That's when the pandemic hit. But what does a recession mean? Cash flow, profits, stock value. You still got to pay your debt no matter what. And that's where the federal government kicked in. Helped companies supply that capital in this recessionary period. But why does the stock market keep going up? Because investors still believe that the managers who are running American businesses and world businesses still have the right idea to value and maximize those returns once we get out of this recession. Even though many of us are unemployed or taking pay cuts or working from home, the value of corporations is still in the market, and investors are creating that value because they still believe that that value will turn into dividend checks, increased stock prices, cash flow, and return. Corporate finance is the middle person between the markets and the management of the company. The middle ground between Mark Cuban and the managers of your business. The middle ground between Wells Fargo Bank and how you manage your business. We're going to be learning about strategies that bring those two together into a successful company. There are three key investment principles that we need to be aware of to maximize this return and this value. The investment principle, which is pretty simple. You want to make more money than what it's costing you. That's the hurdle rate. Another name for WACC, cost of capital, opportunity cost. You want to earn a return greater than that cost. That's what makes it a successful investment. Just ask Radio Shack about that. Just ask JCPenney about that. Companies where the cost of their money became higher than the return that money was generating. The financial decision, that mix of debt and equity that finances the investment. Should I borrow or should I issue stock? Well, the markets dictate that. A lot of people are still borrowing a lot of money. Even though you have to pay it back, it's still cheap. Money is cheap. And because it's cheap, people are still borrowing. If you have cash now, it's a nice time to buy into real estate. Cheap cost, real estate is dropping down a little bit because of the markets. If you got the equity, if you got the cash, now's the time to buy real estate. The problem is a lot of us are not working. Companies are not generating profits. And we still have that debt. The financing decision of investments not only affect today, it affects the future down the road. When markets or economies change. Why did I borrow money to get this house now? 6 months ago. Now I'm out of work. Don't know when I'm going to be called back. I got a mortgage of $2,500 a month. Why did I do that? Because 6 months ago, money was cheap and you were making money hand over fist. The world changes. Wendy, can you see the PowerPoint? Raphael, you can't see the PowerPoint? You're the only one. Check that, could you, buddy? You're the only one who can't see it. Peter, give me a thumbs up. Can you see the PowerPoint? Attaboy. All right. And then the third principle is dividend decision. How do you get the return back to your investors? Do you pay a dividend? Do you give them more stock ownership? How do you get when do you make how much do you pay in your interest on your debt? How do you return that capital back to the investors to keep them happy? Those are the three investment principles: investment, financing, and the dividend decision that drive the decision making in finance. One of the concepts we're going to talk about next week is free cash flow. You go to somebody at a bank. Now, don't go to a bank. They probably wouldn't know this. Sorry, I probably just offended some bankers. You go to somebody who's a financial analyst. You go to Mark Cuban. You go to Warren Buffett. You go to Professor Abadante at the University of Laverne. You go to anybody you go to an entrepreneur. What's the bottom line for investors that they want? They want the company to generate free cash flow. Enough cash flow to pay the operating expenses of the business and have enough cash flow to pay interest on the debt, to pay back principal, to pay dividends, to buy back stock, and invest in other non-operating assets, invest in other businesses. Create cash flow from the business that can pay off your investors. Positive free cash flow. You don't want to, if somebody calls you up tomorrow from your stock brokerage firm and says, hey, Marianne, I got a stock tip for you. Buy Cisco. The first question Marianne should say is, what's their free cash flow position? Damn, the broker will say, you've taken HASI in finance. That's an old line, Wendy. You've heard it before, but it still works. Free cash flow is the key to investments. If a company's not creating free cash flow, they don't have cash to distribute to their investors. They can't pay back debt. They can't pay dividends. Not only making a profit is nice, but they got to generate cash flow over and above profit to pay back investors. We're talking a lot about that next week. And what determines or drives the investment decision and the financing decision principles and whether we get free cash flow is what the money is costing us. We've done this before. The weighted average cost of capital, the percentage of debt and equity and their costs in raising capital for our company. What does it cost us for the right-hand side of a balance sheet? Debt and equity. The higher the cost of capital, the less return on the investment. The higher the cost of capital, the less value of your assets. If your cost of capital is cheap, you have very little risk, you have a great credit rating, you generate cash flow, the value of your business is going to be increasingly higher than it would be if you had high cost of capital. Makes sense? We're going to be refreshing ourselves with that next week as well. You already should know it though, hopefully. And here we go. We're in a wacky time. March 8th, today the Department of Labor said we started in a recession. And there's about 8 or 9 indicators as a finance person that indicates to us whether we're in a recession. And in our particular industry or market, are we being successful or should we cool it for a while? The status of the equity markets, the Dow, the S&P 500, and the NASDAQ. The status of our debt markets, the 10-year United States Treasury note. The status of our leading commodities, crude oil and gold. And more important, every year, the relationship of the currencies in the world to each other. That's cost of money. If I build a plant in Mexico, I got to move dollars into pesos. Is that cheap or expensive? If I build a plant in Canada, Italy, China, India, in order for that plant to run, I have to convert dollars into the local currency. And then when I pull money out of that country, I got to convert it back to American dollars. The world is globalized now. Globalization. Companies cross many borders. The recognition of currency and its value to other currencies is huge. Many of you in this class have relatives, family, do business outside of the United States. You probably know what I mean by that. The value of currencies. Now look how the economy has changed relative to these equity, debt, commodity, and currency indicators from December 31st to June 5th. This tells finance people, marketing people, organizational management people, accounting people, what is going to be happening in the future if you can read these numbers. I don't run a business anymore. I used to for years. But I still wake up every morning, like I did today, and check these numbers. They tell me what's going on with my investments. They tell me what's going on in the market and the industries that I'm familiar with. They tell me about what's going to happen in my classes at the University of Laverne. They do. The Dow, the S&P, and the NASDAQ. I'll talk about that, Efren, in just a minute. Good question. Oops, sorry. That's an important number. Look how the Dow and the S&P and the NASDAQ were all going great guns at the end of the year. Then the pandemic hit and they went down about 20%. But now, especially the NASDAQ, are back to where they were and even higher today. The S&P and the Dow, which are bigger corporations, are a little bit slower coming back. Sorry about the parenthesis, the comma there. But this tells us that the equity markets are not tanking anymore. They're coming back. Your 401ks are doing better. Your investments are doing better. They haven't lost, they've regained that loss of March and April because of the COVID-19 panic. And why are these numbers higher or doing better? Because there's no other place to put your money. The 10-year United States Treasury note. Many of you might know this as the risk-free interest rate. The best credits, what they have to pay. If the United States government issues a $1,000 US Treasury note, 10 years today, that's the minimum denomination of an investment, $1,000. They only have to pay 0.9% as interest on that $1,000. All right. What's 10% of 1,000? 100. What's 1% of 1,000? 1. Excuse me, 10. What's the current interest rate on $1,000? $9.30, where it was almost 20 bucks in December. Money has gotten cheaper. And one reason only, the United States Federal Reserve. They have purposely kept money cheap by flooding the markets with cash, buying up bonds, buying up securities, and flooding the market with cash to keep money or capital available for debt, for lending, cheap. Now, for us who have money in savings accounts, that doesn't do us any good. Have you taken a look at what interest your savings account is earning lately? But for debtors, for creditors, the government has kept money cheap by flooding the market. The Federal Reserve has been controlling that. Why do they want to do that? Because they want companies to keep borrowing money, keep investing. Now, that dried up with COVID-19. So what did the government do? About $8 trillion of cash released to consumers, local and state governments, and corporations, i.e. the airlines, i.e. manufacturing. And where does that, so they now have that capital being replaced that they would borrow, because they're not going to borrow money when they have no guarantee of any future revenue. Not too many people are going to lend them any money anyway, no matter how cheap it is. But now that government $8 trillion of aid has buoyed companies to start turning things around. Now, some industries are going to be longer to turn around than others. But the Federal Reserve has guaranteed the companies cheap money for years. How do you think President Obama, even though Donald Trump, I'm not going to get too political in this class, but Donald Trump every day, I am the greatest president to create the greatest economy in the world. He didn't do a damn thing for this economy. What he did was just become president in January of 2016, 17. President Obama and the House and the Senate in October, November, December of 2016 created this economy, not Donald Trump. Yes, he did help it a little bit by lowering the taxes, but with cheap money started by way back in the 2000s, by even President Bush, has enabled this economy to keep going. So I have a problem with our president saying that over and over and over again. But be that as it may, that's the bottom line in debt right now. Money is cheap. If the US Treasury note goes up, your credit card debt interest rate goes up. If the United States Treasury note goes down, mortgages become cheaper. That's why it's called the risk-free rate. It controls the debt positions of American investments. Question, Peter? Okay. Then we have the commodities. Been to the gas pump lately? It's a little cheaper. Was even cheaper a couple weeks ago. Crude oil is cheap. Why? The dopehead Russians and Middle East countries provided too much oil this year. They produced too much. They got greedy. Oversupply. And they also forgot that the United States is now the largest supplier of oil in the world, not Russia or the Middle Eastern countries. There was an oversupply of oil. Naturally, the prices dropped. One day in April, the futures cost of oil was negative, less than $1, if you can believe that. I saw that one day and I just shook my head. I go, now I know the world is wacky. I'd have to pay somebody to invest in oil. negative, but has now since come back. Countries aren't producing as much as they used to. They're managing it better. The economy is heating up slowly but surely, and I do mean slowly, thus some more demand for gasoline and oil products. But oil is still dirt cheap. What does that mean? I'm glad I sold my stock in ExxonMobil. I'm glad I don't own Chevron. Now, I might buy those companies now because oil is going to come back as the economy heats up. But oil will never get back to the prices of 5 years ago. Why? Tesla. Why? Solar energy. Why? Conservation. Why? Global warming. We're not using as much oil products anymore and will ever. Different alternatives. Electric cars, solar powered homes. The coal industry will be dead. And don't listen to the people from West Virginia or Canada. The coal industry will be dead in 5 years. Totally dead. The Chinese are working on that right now. What's your cat's name, Wendy?
Sorry, her name's Penny. She's being very needy.
Very nice. Nice to meet you. Petty, did you say?
Penny.
Penny. Oh, okay. Gold. Gold is a hedge fund. If the economy is tanking, people buy gold. It's a hedge. It's an alternative. So gold is naturally a little bit higher than it was at the end of the year because the economy is. One of the first things I do is when I see my stocks dropping, I sell and I buy a gold ETF, exchange traded fund, invest in gold. It's a hedge. Now, when I think I have a stock that's at low value and I'm going to invest it, I sell off some gold and buy that stock. But gold is my hedge. When the market goes down, I buy gold. When the market goes up, I sell gold. If we're going to have a brawl with China or North Korea, I buy gold. If all is rosy in the world, I sell gold. And then we have the currencies. The relationship of the euro, the Chinese yuan, and the Japanese yen. The dollar is still very strong in the world. Why? We have the leading companies. We have, knock on wood, a democracy that somewhat works, although these last few months I'm questioning that. But compared to a lot of other places in the world, it works. We have a military that protects the world in many cases. And we have Taylor Swift, Arnold Schwarzenegger, and the LA Lakers. What is that supposed to mean? Those are brands that are all around the world. Well, you go to China and you mention Kobe Bryant, it's like a religion. You go to any parts of Europe and mention the Lakers. Oh, are they on tonight? You can be in New Zealand and put on a Taylor Swift song on your iPhone and people go, oh, I love Taylor Swift. These are brands all around the world. And because of those brands, because of our social system, because of our military, the dollar remains strong. And that's an important characteristic with currency. So these indicators tell us if all of a sudden you start seeing this euro United States dollar drop below 1, as long as you see this US China drop below, the relationship of euro, if you see this relationship of euro to the dollar go to 2, If you say this relationship for the United States dollar and China go to 6, you see the relationship of this US dollar to yen go to 105, something's going on in America that's troubling. The dollar is falling. Don't think that's going to happen, not in the near future. But these tell us a lot of things about how we manage our business, about the value of equity debt in the market. We're going to be learning about these, and some of you probably already know a lot about these as we move along. The Franklin. That's the dollar that represents value in the world. Now, you can disagree with that if you want to. But $100 is a lot more valuable to the peso today than 3 years ago, than a year ago, to the euro, to the Chinese yuan, to the British pound, to the Canadian dollar. And as an American business, that creates good and bad news for you. It makes the cost of your products overseas more expensive. But at the same time, it allows you to buy up more currency as an investment in these countries. The Chinese yuan. What has been one of the big stories of 2020, and even before that? President Trump charging tariffs and costs on Chinese goods produced in China by American companies, I might add, but produced in China coming back into our country. Charging them tariffs and fees because the cost of their products, the cost of making their products in those countries is a lot cheaper than in America. So to create value for American businesses, you increase those costs to consumers and they'll go, oh, I'll buy this because it's made in Memphis, Tennessee instead of Beijing, China. That was one of the key areas of President Trump's economic plan. That drives a lot of companies. And the euro. Used to be a big trading partner of ours. Now they hate us. Wonder why? Starts with a T, but we'll move along from that. This value of this currency around the world plays a big part in strategic decisions of financial resources. And we'll be concentrating on that a lot in this class. So as we move forward into the class, into this next few weeks, we're going to be talking next week about how money changes value over time. Chapter 4. We're going to be talking about how this influences the value of bonds and stocks in the market, not as investors, but as companies seeking capital. And what's the driving force behind the time value of money and the value of money? Well, government regulations, yes, but even more so, the risk that that investment takes. The risk. Some of you, if I gave each one of you $100 today, some of you will probably just put the $100 in your sock and put it in your drawer. Why? I know where it is and I'm not going to lose it. Low risk. Others of you are going to take that $100 and put it into your savings account. Still pretty low risk, but it's at some other place. You can't see it every day. It's not in your sock drawer. But still it's pretty cheap or pretty safe, but you're not going to earn much money on it. Maybe 3 cents a year. Or some of you are going to take that $100 and buy a treasury bill. Or take that $100 and buy stock in General Electric. A little bit of risk, but you're going to be making maybe 1-2%. A little bit of money. But others of you are going to take that $100 and invest in Tesla. You're going to have to get a couple more than $100. Or invest in Amazon. Or invest it in ETFs or mutual funds that invest in those companies. Why? They've been making a lot of money. And I want to get in on that gravy train. But there's a risk. When you get into these companies, is it too late? Is it too early? Or maybe you'll take that $100, invest in a company that no one's ever heard of. Now, everybody's heard of this company now, but a year ago, how about Beyond Meat? How about Zoom? You know, if I invested 100 shares in Zoom on March 2nd of this year, I would have made $9,000 if I sold it on Friday of last week. In 2 months, I would have made $9,000. But who in the hell knew about Zoom 2 or 3 months ago? I did, but I didn't think it was worth an investment. So as you can see, the $100 can give you different returns, but the risk and the availability and the liquidity of that money changes with the type of investment it is. And companies have to think about that. How badly do you need the capital? Are you willing to issue more stock in an expensive market, and it's going to cost you a lot of dollars in issuing that stock in the market? How bad do you need the capital if you're leveraged at 90% debt in your company, but the only way you can get capital is borrow more money from Wells Fargo? With a 90% debt leverage, you can't afford a recession, or you can't pay back your loans. Or what's the risk of getting $100 from Mark Cuban on Shark Tank? Not so much risk of that money being lost, but now, Mark, you got to listen to Mark Cuban on how you run your company. Your company. What the hell's Mark Cuban know? He's got the capital. That's the risk. So we're going to be talking about all these things in chapters 4, 5, 6, and 7 next week. And talk about those examples of how they drive our markets, our managing financial resources. If somebody came up to you today and say, I can guarantee you're going to make $1,000 if you give me $100 today. I can guarantee it. And you'll go, wow, $100 is going to turn into $1,000? What am I investing in? Well, a drug cartel in Costa Rica. And you can have the possibility of being arrested if they find out that you invested in this company in America. Really? Let's go. Let's do it. You're willing to have that risk. But what if you have a family? What if you have a job? What if you are a leading member of your community? Do you want to make that decision? No, I think I'll pass. I think I'll put the $100 in the bank. Not too sexy. I'm not going to return it. I'll be lucky if I return $110, $10. But I don't want to go to jail. I like being around my family. I don't want to invest in people that do that kind of stuff. Right? Those are extreme examples, but that's what companies have to think about when they go after those capital dollars. And that the money they take at those costs and that investment, is it going to return enough to pay it back? A lot of you probably deal with this. Boy, I'd love to get a new BMW. But I'm going to have to take out a 4-year car loan, and my monthly payments are going to be $1,500. You really must want a BMW. Okay, I'm going to buy a BMW. Here we go. But no family vacation this summer. And I'm not going to be putting that money into my son's college education fund for a couple of years. But I got a BMW. Uh-oh, I just was laid off in April. Does that tell BMW that I get a pause on my $1,500 a month? Hell no. Why did I make that decision? There you go. You have to think not only of your ability to pay the money back today, and is the investment of that money creating enough opportunity or return to warrant that cost of $1,500 a month? And what is it going to happen in 2 years when you're still in 2 years of a 4-year loan and something changes in your economic fortunes? That's why, here's the Professor Hasse Chamber of Commerce pitch tonight. That's why you guys are all sitting here tonight, to get an MBA degree. It reduces your risk in the market. It gives you more skills. It makes you more employable. It gives you the opportunity to go to a bank and say, you know, I got an idea for a business. Here's my business idea. Hey, that's a hell of an idea. Tell us about yourself. Oh, I have an MBA degree. Really? So you know how to manage, how to organize. All right, we're going to go with you. Having an MBA degree gives you the marketable skills to stay competitive when economic, social, family conditions change. You still have those skills. Now, here's the downside of getting an MBA degree. Now, for some of you, not so much, but for my students that I have on the Laverne campus, it's a big deal. You got to borrow the money to get the MBA degree. And I already have money that I borrowed from my bachelor's degree. So Professor Hasse tells me it's great to have an MBA degree because I'm more valuable in the market, but I'm leveraged up to my neck in debt. Then I would tell you, don't get the MBA degree. You're going to have to wait. You're going to have to find other sources. If you're a veteran, the government can help you a little bit. If you work for a company, sometimes they can help you a little bit with your MBA degree. But if you have to go into more debt, more fixed cost, and you still have to wait a few years to get the return on your MBA, bad decision. Welcome to Radio Shack, JCPenney. Companies that are failing. They're being out-competitive in the market due to internet, technology, organizational management, marketing, whatever. And they have so much debt that their fixed costs are so high in the limited markets they're in, they can't compete. They're draining or they're burning cash. Chapter 11. Chapter 13. Chapter 7. Liquidity, devaluation. You don't want to put yourself into those positions. So that's every day you handle risk. I don't tell my wife this. She's not listening. But I don't like to wear a seatbelt in the car. I hate it. When I'm driving on the freeway, trust me, I wear a seatbelt. But driving around town, I never do. I'm taking a risk, aren't I? Some knucklehead goes through a traffic light and hits me on the side of my car. I fly out of the car. I'm in big trouble. That's a stupid risk. I think about that every time I get in a car. You might not think that, but I do that. But when you think about investing in capital, investing in an education, investing in a new car, if you think about Radio Shack and Amazon and Tesla investing in new businesses, new equipment, new factories, new distribution centers, what's the risk involved in those decisions, and can you handle that risk? Now, some days when I'm feeling a little uncomfortable, I put on my seatbelt when I'm just driving 2 blocks in the Claremont. You might want to say, hey, Hasse, why don't you walk the friggin' 2 blocks instead of getting your stupid car? Good question. But why do I need a BMW and put myself in that tight a financial situation? Because I want a BMW. All right. You know the risk. Bad managers and bad leaders do not understand risk. Do you ever work for a boss who has no clue what the hell's going on? I have. Clueless. The only reason they're a boss is because they think they're Mr. or Miss Personality, or they have a network or somebody in the business that likes them. But if they have no clue what's going on in their departments or their areas, they're a risk to the company. And they don't even know it. You try to play fast and loose with ethics in the hiring practices of your business, eventually that's going to burn you. You try to play hard and fast and loose with sustainability issues, environmental issues, customer relation issues, that's a risk to your business. Managers don't understand risk, that's a big problem. You don't understand the risk in your everyday life. Geez, I'm sure glad I put some money aside 3 months' pay in my savings account a couple years ago. That sure came in handy this year. You covered your risk. Managing financial resources in this class is, above all else, producing value by managing risk. Understanding the good, the bad, and the ugly about your business, about your capital, about your assets, about the people you hire and work with. That's an important theme of this course, to pick that up, to understand it. We're going to concentrate on that in various case studies about how we recognize the risk, how we interpret the return, and apply that to our particular company and setting. And each one of you on a daily basis do that. Should I drive on the 210 freeway or take the back roads? Should I not wear a seatbelt? Should I buy a new asset that I can't really afford? Do I really need another TV? Should I go out to dinner tonight or get a pizza? Those are risks, and how you make those risk decisions, you're a manager. You apply the negative and the positive to the return that you'll get. Oh, who cares about going to dinner? I want a good pizza, and it's cheap. But you know what? I really want to go out to dinner because it's just a time to relax and have a good bottle of wine, and it's worth the $200. All right, but tomorrow I go without that $200. Is that okay? All right, it's okay. If it's not okay, companies do this daily, and I'm sure the companies you work with are managed to keep their risk minimal. HR, organizational management, marketing, accounting, and finance. Because without finance, accounting, marketing, HR, organizational management ain't gonna exist without the cash. You need the capital. And as financial managers, we have to understand the risk valuation. Chapter 6, the PowerPoint. Understanding beta analysis. Understanding risk and return. Our main themes for next week. So, it's 8 o'clock. I did a good job. Anybody have any questions of me this evening? Elizabeth, Stephen, Alexandra, Teresa, Wendy, Peter, Joseph, Efron. Efron's asked me about 6 chat questions. He's been keeping me busy here. Stephen, Joey, Raphael, Daisy, excuse me if I mispronounce these, Yarima, Carrie, Paulina, Marianne, Joanna, Dodger fan, really, Joanna? Dodgers, really? Tiffany, and Vivian. You guys are too easy, but trust me, in 2 weeks, you'll have questions. All right, everybody. I'm looking forward to working with you all. The first thing you should do this week is make an appointment with me. Pick a time so you can talk to me Tuesday, Wednesday, or Saturday about the class individually. All right? And then I'll see you all next Monday. I'll send you probably an email on Friday with my introduction video to week 2. A little bit of looking forward to what next week. Next week, we have another discussion post where I'm going to give you the financial statement of a company. And you're going to tell me something about that company. I'm going to show you a financial statement of a company. And you're going to tell me what's up with it. debt, cash flow, profit, what it's going to tell you. That's going to be our discussion post next week, is tell me something about a financial statement and what it tells you. So with risk, the understanding of where capital comes from, and understanding how to read a financial statement, that'll get us really hot and bothered going into capital investment decisions beginning in week 3. Now I have a whole lot of chat questions. Thank you, you're an idiot. Thank you, you're an idiot. Okay, that's good. Thanks, everybody. I look forward to working with you all. And I'm sorry that we have to do this in a environment of Zoom, but this works out okay. See, you know, you can be relaxed and take a finance class. And I'm going to post this class on YouTube and Blackboard tomorrow morning. And if you have any issues, but I'll talk to you all this coming week. So adios. Thanks, everybody. Look forward to working with you. You're all a good-looking group, a lot better looking than me. And I'll see you all online this week. Adios.